We are now in the final leg of the accounting cycle, that is preparing the financial statement. But before we begin, just imagine if the foundation of our building isn't strong, then obviously the building will not have a strong stand. In the same way, if the base we are using to prepare accounting statement is inaccurate and has certain errors, then our financial statements too would not show a true picture of the business. In order for it to be true, we need to check for all possible mistakes by scrutinizing our trial balance and other accounting records and then finally correcting them. This process is called as errors and rectification. Well, we did this exercise of checking and scrutinizing of our friend Daniel's trial balance that we made, and it was completely free from errors. So we don't need to worry about it. Meanwhile, Daniel, being satisfied with our services, introduced us to his friend Mr. George. This client came to us very worried. Let's see what happened with him. He received a call from one of his creditor, Mr. John, asking for his payment of 1,000. This purchase transaction did not show in any of his books, but he did find an invoice of this purchase in his source document. He even noticed that his trial balance did not tally. He requested us to help him to check all his records, see if there are any more errors, and to prepare a correct trial balance for him. So, shall we proceed to scrutinize his trial balance now? Let's go back to his books and check for his creditor, Mr. John. Yes, there is absolutely no record of credit purchase from John. When he made a credit purchase, the entry should have been as follows. But he omitted this entry completely. If this purchase entry is omitted completely, it will not allow to make timely payments, which in turn creates wrong image of our business in front of our creditors. To make this correction, we will simply have to pass this entry now. This kind of error, where a transaction has not been recorded at all, is called an error of complete omission. From these vouchers we have here, we did a sample check and found that he had paid his office rent of 2,000 in cash. Rent paid in cash. The entry should have been as follows. The two ledger accounts, it should have been recorded in our rent account and cash account, right? So let's check his ledger. Now here in this cash account, he has made the entry of rent. The second effect should be here in rent account, but it is missing. Now here, since he has not recorded rent paid, he may forget and may make this rent payment twice. He recorded only one aspect of the transaction. This means this would also result in difference in total of our trial balance, or say it will lead to disagreement of the trial balance. Here, this trial balance shows a difference of 2,700, falling short on the debit side. So this is where we'll create a temporary account which will just act as a helping tool to us to find out why there is this difference. We call this temporary account as a suspense account because we are trying to solve a mystery. We'll transfer this 2,700 on the debit side, and as and when we come across any one-sided error due to which our trial balance totals may not agree, we will park those errors on this suspense account. Once we have found out these errors, our suspense account will have its debit equal to credit. Don't worry, it will be clearer as we proceed further. Now coming back to this error, we will correct this by now debiting rent account for 2,000 and on the other side we have to credit or reduce this difference by 2000 from suspense account. This was an error of partial omission. Both of these that we have seen earlier, that is complete omission and partial omission, are type of errors of omission. Now we have only a difference of 700 in our suspense account. Now let's continue and analyze his trial balance. Here we can see that advertisement is showing a credit balance, but advertisement being an expense is on the debit side generally. When we generally record the entry, it is advertisement account debit to cash account. But the entry passed here is incorrect. He has even credited advertisement account by mistake. If advertisement is wrongly credited, so when there is a need to check overall expenses, it will lead to a false belief that there are less expenses and more profit. So how do we correct this? Since one effect has been correctly posted but the other isn't, this will affect our trial balance. Means indirectly this error will be shown in suspense account. Now here advertisement is credited by 350, which is wrong. To cancel out this effect, we will debit advertisement by 350 and then to pass the correct entry, we will debit this again by 350. In total, advertisement is debited by 700 and this will be credited to suspense account. Now we can see suspense account is tallied. This means that all errors affecting the difference in trial balance has been found. But still we'll scrutinize further. So basically any kind of clerical error made while posting is referred to as error of commission. I hope you all are with me. In this cash account, there is a stationery expense of 1000, but the second effect has not been given in stationery account. And on the other hand, we can see interest is received of 1000, but the second effect is not given as there is no interest received account. In this case, a mistake of not debiting one account and another mistake of not crediting another account by an equal amount compensate for the mistake. We wouldn't have been able to find the error as it doesn't affect the trial balance. Such errors where the effect of one is cancelled or say nullified by the opposite effect of one or more in another account are called compensating errors. For this, the correction entry would be that which we have not recorded, that is rent account debit to interest received account. This error will not appear in the suspense account. To find such errors, it is important that we carefully scrutinize all the records. Just take a minute and go through the chart and the types of errors that we have come across so far. We have broadly covered 3 types of errors. So now moving ahead, here in this machinery account, we can see that purchase of machinery is recorded at 30,000, whereas there is another account for expense on machinery installation. As we know, installation charges or any expenses to bring the machinery to working condition must be included in purchase of machinery account itself. So the entry should have been as follows. And what he recorded was this. Even though this would not really affect our trial balance or balance sheet, this wouldn't show a true and fair value of our asset and profit. To correct this entry, we'll have to debit this expense of 1000 to machinery account and credit the installation expense to cancel it out from there. Such an error is due to lack of basic accounting knowledge, and hence it is called an error of principle. So finally, it seems we have located the errors in his books. We went ahead and passed all the rectified entries and made a new adjusted trial balance. From all these errors that we came across, one thing we can say is that an arithmetically accurate trial balance may not always mean it is correct in the true spirit. Thus, this process of errors and rectification is really important before moving towards preparing strong